Hello everyone, I'm Shekhar from Momentum Lab. Today is day 60 of my momentum investment journey, building it in public. So in the monthly review, what I do is I first get high-level metrics of my strategy and compare it with the benchmark index and see how am I performing. And secondly, I'll also do rebalancing of my portfolio. Since every 15 days I do rebalance, that is 1st of every month and 16th of every month. So today being the 1st of June, I'll do the rebalance. And thirdly, I'll look at some of the charts of the stocks that I'm holding. And fourthly, I'll also be look at the market indices and their charts as well, just to see where the market is heading. So this is the typical review that I do of my strategy every month. So I'm just doing it in public, the way I do it independently. So before I proceed on, this is not an investment advice. I'm not a SEBI registered advisor. It is just for education purpose and knowledge sharing and not a recommendation anyway. So my portfolio in the month of May 2024, it moved up by 5.46%. So the way I calculate monthly returns is by subtracting the month-end NAV with month start NAV and divide by the month start NAV. So that's how I get the monthly performance. The same way I do for Nifty 200. So my portfolio went up by 5.46% or the strategy of momentum compared to only 0.54% of NSE 200. So let's compare the drawdowns also. Drawdowns are nothing but the highest peak to the lowest trough, whatever is the distance, right? That I'll calculate in terms of percentage and plot it as max drawdown. So in this month, my strategy had a max drawdown of minus 4.95%, almost 5%, whereas the Nifty 200 had a drawdown of minus 3.3%. So if you compare between the risk to reward, that is nothing but the returns divided by drawdown. That's how you get the ROMAD ratio. So you see that the ROMAD ratio is 1.1 for my strategy, whereas it is only 0.16 with NSE 200. So this is the important metric to track and note about. Like if you are having a very good ROMAD ratio for your strategy and not just for any month, for let's say consecutive or for a prolonged period of time, then the strategy is really good. So I'll also show you quickly my previous month's reviews to get you an understanding of how my strategy is performing month on month. And the other metric that I track is what is the percentage of days that my portfolio has beat index. So the portfolio that you're creating should beat the index consistently, not for a few days and stay below the index for a larger period of time. So that's how I don't want it to be. I want it to be consistently up above the index. That's the metric that I track, 90%. Overall, for the first 2 months of my strategy, the portfolio XIRR is at 102.09%. As I always keep mentioning, we should give more time for the XIRR to settle, at least in a year, and then compare. So if you see the NAV comparison, this is how the NAV comparison looks like. The blue color line is my strategy and the red color line is the Nifty 200 index. So the outperformance started from the month of May itself. The April month was flat. And in the month of May, there were very less corrections. The corrections were not more than 2.5%. And that too, this correction was the last week of May, or else it was a very steep move in the month of May. So that's it about the strategy. Let me quickly show you how I performed in the previous month. So this was on 1st of May, last month April performance. So last month also, the key metric I'll show, the ROMAD ratio, it was 1.36 compared to 0.59 with the index. Again, the monthly return of April was also very good. The percentage of days where the portfolio bet index was 75%, again good. The portfolio XRR also was decent, 66.94%. So overall, both the months, April and May, were good. So let's see how June reacts, because June is going to be election results day. I'm expecting it to be volatile, but hopeful that it will be volatile on the upside, not on the downside. So let's see. So that is about my portfolio. Now let's do the rebalance. So as you all know, I do rebalance based on the momentum. And I see that the momentum should persist in my portfolio stocks. Now, how do I calculate momentum? I take into consideration last 6 months, last 3 months, last 1 month returns, and then calculate a rank on these returns of the Nifty 200 stocks. And I also apply some filters and then get the list of stocks and I give them a final rank. If you want to know more in detail about how do I do this ranking, I'll give you the link in the YouTube description for you to go ahead and check it out. So based on that, I'll list all the stocks on ranking order of the descending order of rank. Now rank 30 is the Lakshman Rekha. So this line, the number 32 is because we're leaving the first 2 rows empty. So that's why rank 32 is the benchmark. If I see that any of my stocks are exceeding this exceeding this pink line, then I'll exit. If my stocks are within this range, I'll continue to hold them. So the green colored stocks are the ones that I already have and are having a rank less than 30. So I'm going to continue them for the next 15 days. The ones which are getting out are these red ones: Trent, Torrent Power, Oil, and Sale. So I'm going to show the charts of these four stocks only, not the green color stocks which I'm already holding. I wanted to show why these stocks are exiting in terms of chart performance also, because anyhow, I'll not see the charts to exit. I'll only calculate the ranks. It is purely mechanically driven, system driven trading strategy or investing strategy. There is no bias to it. The reason I'm going to show charts is to get an understanding of what and how do you infer this data. That's the only reason. So since these four stocks are getting exited, I need to add four more new stocks. Now, how do I add four new stocks? From the top of the list, wherever I see the gray color ones which are empty, I'm going to pick it up. So that's how I've picked up RVNL, BEL, Adani Power, and Dixon. You see that MassDoc has been omitted. The reason MassDoc is omitted is because I'll also check the smoothness factor. Now, how do I calculate smoothness factor? I've already shown earlier, but if someone is interested, I can again show. But again, if you want to see the detailed video, I can do it. I can share that link with you guys in the YouTube description. You can take a look at it. So the smoothness factor is calculated by taking into consideration the number of up days to down days in the last 6 months. So if there are more up days than down days, then I take their stock. So at least the up days should be greater than down days. To get that, I should have more than 50% as a number. So RVNL had a very good up days to down days ratio, or what I call as a smoothness factor, at 56%. BEL also had 62%. MassDoc had 49.6. So even if I round it out, it will come to 50%. But I omitted MassDoc because it was having more number of down days than up days. So I picked up the next stock, that was Dixon. Adani Power anyhow was third in the rank, and Dixon was the new addition. So you see RVNL, BEL were comfortably placed, 56 and 62. MassDoc was dicey. MassDoc chart looks good, but I wanted to follow the rules. So I'm following it. So Adani Power anyhow, even if I had picked MassDoc also, it would have been fourth. So that anyhow was there because Adani Power ka smoothness was 52%. Dixon was at 57% in terms of smoothness, and logically also this was the next in order. So these are the four stocks that I'll be investing in on Monday, which is June 3rd. So that is the rebalancing story. And now let's look at the charts. So let's see the charts of the stocks that I'm going to exit. First, let's see the Torrent Power. Torrent Power I entered on 1st of April. So it took almost 2 months for this stock to stay in my portfolio without getting exited. The reason it did not get exited because its overall rank was really good. Torrent Power's overall rank was really good. The reason being it had a phenomenal 6-month and 3-month performance, whereas its 1-month performance was not that good. That has dented its 1-month rank considerably, and hence overall rank also got slipped into. So my portfolio gives some leeway. It gives a leeway of 2 months, actually, especially in a stock where the 6 months or 3 months is really good. But if the stock is not performing since the last, let's say, 1 or 2 months, if it stays flat, right, then the 1-month ranking will take a hit. And if it stays flat even further more, right, then the 3-month ranking also takes a hit, because in 3-month ranking, we take into consideration the last 1 month and the last 2 months and the last 3 months, right? So the 1 month is bad and the 2 month is also bad, then the 3-month ranking also will take a hit. As you can see in the chart also, it has been flat since last 2 months, and hence there were other stocks which are performing better than this. So that's why its rank fell. Maybe, we don't know, it can move further from here, but we don't take into consideration the chart movement now at this point of time. It is purely systems driven. The next stock that I'm going to talk about is oil. Same is the case with oil. Oil had a phenomenal move before it started to consolidate, and hence the 6-month ranking was pretty good. You can see the 6-month rank. 6-month rank was good because it had a 106% up move. Since it had 6-month ranking, percentage of move was 106, right? Its rank was 4. But its last 2 months, last 3 months and last 1 month, it was flat. The returns 6.8 and 1.8, and hence the 3-month and 1-month rankings took a beating, 75 and 67, overall pulling the rank down. So that's the reason I'm getting exited from this strategy also. The chart wise, it looks really good. If I were to trade this, maybe I would have traded this chart because it is undergoing a very good consolidation. But as the strategy says, I'll have to exit. No emotional or manual decisions, purely systems driven. It gave sufficient time to this stock. It gave 2 months to perform, but the stock did not perform. So I'm getting thrown out from the stock. The next stock that I'm getting exited is Trent. Let's look at the chart of Trent. Trent also was beautiful. It was undergoing good consolidation. It made a up move. I entered somewhere here. So it was 1 month of holding. In this 1 month, it did not move. Unlike oil or torrent power, I'm getting thrown out of this chart in just 1 month because its 6 month move was also not significant. It had 6 month, it had a 3 month move, but it had a very long consolidation in this 6 month also. Because of that, its 6 month rank was also not that good. If you see, the 6 month rank was 22, 3 month rank was 44, and 1 month rank was 63. Net, the overall rank pulled down. It was just at the rank of 33, just below the Lakshman Rekha, so it is getting exited. The fourth stock that is getting exited is Sale. I never understood this chart pattern of Sale, so I could not make any sense out of it. But what I see is that yeah, there's a lot of whipsaws. So if you observe my strategy, it takes into consideration 6, 3, and 1 month. So there is advantage and disadvantage of taking or building a momentum strategy of these three time frames. So if a stock is consistently performing or in a consistent uptrend of 6, 3, 1 month, then that stock stays in my portfolio. If the stock is not performing for the last 6, 3, and 1 month, it is taking some time for it to move, or it is undergoing a lot of um, sideways pattern, then my strategy will kick it out. So that is what has happened with Sale. So it is undergoing a lot of sideways movement before it makes an up move, and hence it throws out. So the reason I'm talking about this is because there are many ways in which you could construct a portfolio strategy of momentum. So the momentum investment need not necessarily be based on the strategies that I told. It could be based on completely new set of filters. You could take rate of change of last 1 year, 9 months, 6 months. You could also take only into consideration last 1 year, or you could also take a risk adjusted return or Sharpe ratio returns, or what, there are हजार ways of calculating momentum. I have just shown one way of calculating momentum, and each momentum strategy has its own advantages and flaws. The advantages and flaws one should know. My advantage is that my strategy will not entertain slow movers. The disadvantage is that my strategy can is not patient to hold stocks which are undergoing long consolidations. So I know this drawback or fallacy of my strategy, and I'm okay with it. I'm living peace with it, and I exit or enter stocks purely based on whatever my strategy says. So based on your comfort level, you have to devise your own investment momentum investing filters or momentum investing strategies. So I also will be doing a video on to show you the different types of momentum strategies and how can we create them. So each strategy will have its own personality, will have its own set of filters, and will also perform according to certain market conditions. So I'll do that video later, so you can take a look at it and try to see which one works better for you. So I've covered the charts of the stocks that I'm exiting, and let me also quickly show you the stocks charts which I am going to enter: RVNL, BEL, Adani Power, and Dixon. So let's take a look at RVNL first. I think these are all government PSU stocks. Oh, wow, coming from a long consolidation after a big up move, and now it is consolidating very tightly. RVNL, if you see, it is undergoing a very tight consolidation. Very nice. Next is what is the next stock? BEL. Again, BEL is also a PSU, Bharat Electronics Limited, headquartered in Bengaluru. This is also undergoing a very tight consolidation after giving a good breakout. I think the election results are already baked in. Seeing the number of PSU stocks coming into my portfolio: BDL, RVNL, HAL, BEL, Mazda was also supposed to come. And then NHPC was also a PSU, IRFC is a PSU, BHL is a PSU, REC is a PSU, PFC is a PSU. Wow. So I think that's the thing. I mean, Adani Power is also okay. Then let's take into consideration Adani Power and check this stock. Adani Power also coming out of long consolidation. Then Dixon. Dixon is secularly up-moving stock. I think it has already broken out a couple of months back in the month of Jan itself, and moving consistently and making higher highs and higher lows. Very good. Let's also quickly see Masdog. I might be cursing by I'm omitting Matchdog, but that's fine because that's what the rule says to only take smooth stocks. So this is one more filtration that I keep for myself. If, as I mentioned, you can create your own momentum investing filters and rules. The reason I keep smoothness is because I want to pick up stocks which are undergoing neat uptrends like this, where the number of up days are more than the down days. So these are the stocks that I like because it gives a very clear uptrend. So there is a research backing also to it that, I mean, to pick such kind of stocks, I'll talk about it. Whereas Match stock, even though it is a really good stock to trade, but for me, I don't prefer. I mean, I don't prefer because it has not come into my selection criteria because the number of down days are more than the number of up days. So what does it tell? It tells us the characteristic that these are stocks that run very few days and take long gestation times to consolidate. So unless you are a very good trader who's picking at the right spots of the breakout, you will make a very good move. If you hold it up during the wrong times, then you'll have to sit out for a very long consolidation before the stock again makes a move. So what the problem is, like, let's say just like oil. So if I don't take into consideration this 50-day rule, right, and if suppose somewhere I entered midway, then unnecessarily what will happen, if it is undergoing a lot of consolidation, then my 3 month, 1 month rank will take a hit. So what will happen then is I'll get out of the stock somewhere in between before it finally makes a move. So to avoid that, I've kept a filter where the consistency of the movement should be there of 6 month, 3 month, and 1 month. So that is one drawback. Also an advantage. Advantage is because you never know how long they'll take to consolidate, or you also never know that after consolidation if they'll start to move up or start to go down. So to avoid drawdowns, I take into this this filter of smooth days. So that is about the stocks. Let's also quickly see the indices. I'm also tracking gold now because so far it has been one way tracking of equities. I also wanted to see how the alternate assets are tracking or moving to get a sense of the direction of the equity market. Over a period of time, I'll also track other alternate assets also. I'll be showing you what other alternate assets we can track to get a sense where the money is moving in. Gold seems to consolidate at the high levels, and the Nifty is undergoing a consolidation. It made a all-time high last week, but again, the last week was a breather or a downward move. It is now resting at 21-day EMA. What I really like is Nifty Junior. Nifty Junior is the outperformer. It continuously is making a higher highs and higher low structure, and is always respecting the 21-day moving average. And it is in proper order. Proper order as in the 21-day EMA is above 50, 50 is about 100, 100 is about 200, and the stock or the market index is about 21. The strength is in Nifty 50, Nifty Next 50, sorry, and also its cousin Nifty Mid Cap 150. These are really good indices. If you are having stocks in from these indices, then you've picked up where the strength is. Small cap and micro cap are also good, but they are not making higher high and higher low structure like this. You can clearly make out the higher high and higher low. Whereas in small cap, right, these are consolidating at the same levels marked by this horizontal lines. Let's look at micro cap also. Micro cap also same thing. They're not making higher high, higher low. They're still in the consolidation phase at this horizontal level. Nifty 50 is also at the horizontal level, not making a higher high and higher low. Mid cap is the strongest of all the pack. Now that is about the market caps. If I look at the investable universe for my case, I track Nifty 200 closely because that is where I pick all the stocks. So as a broken record, I've been showing this channel for a long period of time, and it is still stuck in the channel. Last week I said, when we were at these levels, I said that we may take a breather because we have hit the upper ceiling of this channel the same way it did. Now we're at the midpoint of this channel. You can see this blue line. We're at the midpoint, and the blue line is also coincided by the 21-day EMA. Now this is critical, whether we go up from here or break down. If we break down, again, we'll be coming to the downward channel, and we'll have to see what will happen at the downward channel. Either way, it should take either the upward channel or the downward channel, because it cannot continue to keep on moving in this parallel channel for a large bit of time. So since the election results are coming this week, I expect it to take a decisive action. Whatever it takes, I have the action plan ready to exit based on my portfolio performance. I'll also quickly show how my portfolio is doing. So right now, the portfolio heat stands at 251.46%, indicating that I have sufficient room to take more risk. My worst case loss is nothing but if all the stocks hit my stop loss or exit criteria 20%, this is the maximum I'm going to lose. Whereas I'm already sitting at a gains of 2.25 lakhs. So I compare this by this. So that is a portfolio hit, which gives me confidence that even though the markets are volatile, my portfolio is doing relatively better, and it gives me a scope to take even more additional risk or to wait through this volatile periods. So that is what I'm going to do. Wait through these volatile periods. I'm not going to pull out money. In fact, I'll only be adding money if I see a good traction. So that is the scenario. So far good. The market volatility, actually, in my case, if you ask, it is not that volatile, because if you see the drawdowns, they've not exceeded more than 5%, and 2.5% only twice. If you see historical data, right, of let me show you the historical data of Nifty 200's drawdown. So Nifty 200 drawdown, if you see, you will get a picture of, yeah. So this is the Nifty 200 drawdown since 2014. Now, if you see the number of times Nifty 200 fell by minus 5% is very high. The number of times it fell minus 10% is less. Number of times it fell by 20% is very, very less, unless in black swan events. So if you see that stats, so between 0 to 5%, 52% of the times it undergoes a correction between 0 to 5%. So it is absolutely normal to fall between 0 to 5%. 5 to 10%, it falls by 30%. It is less common, but yeah, it also does happen. So in overall, between 0 to 10%, it is 82% of the times for the index to fall by 10%. I'm not talking about the strategy, my strategy. For the index to fall by 10%, it happens pretty common. 82% of the times, they do fall by 0 to 10%. So if you say this as a volatile, then it is not, because clearly the market or the behavior says that this is not a volatile period. It is a very common phase of the market to fall by 0 to 2.5 or 0 to 5%. So don't term it as volatile. In fact, the election results might turn out to be a purely non-volatile event on the downside. But nevertheless, we don't predict the markets. We only react to what market says. And from that point of view, however they react, I have an exit plan and an entry plan. So it is important for everyone to calculate their own portfolio and see where their exit lines are drawn and where their entry lines are drawn. For me, in fact, the portfolio heat does suggest that to add more or top up more. So let's see. That is how my portfolio is placed right now. That's all, guys, for this week. Let's meet again next week after the election results are announced. Thank you. And if someone wants an access to this Canva file, I can give the access to Canva file so that you can calculate these figures for your portfolio. And if you also want to calculate this portfolio sheet, I'll also provide a link to this portfolio sheet course. You can take a look at it. Thank you. Have a nice day. Bye.